Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, yesterday's decline got very emotional as we saw the markets trade through the 3360 level and print down toward the S3 level on the market grid on a weekly basis. Now, we did see overnight that the market was able to print through these levels, printing just below 3,300 on the futures, but rebounded sharply. I'll cover all the details of this in the technical section. As we look at the markets, we've seen a lot of changes very quickly. On last Thursday, we got the RXT sell. We also got a sell of the SPY and the futures as well. Not only did we get a liquidation of the trade that we put back on May 4th at 28.44, but we got a reversal to go short. And now what we're seeing is the acceleration and the downside, moving the daily charts into a downtrend. One of the things I continue to do on the channel, especially when I talk about the database every night, is make a distinction between the short-term models and the long-term or otherwise short-term rotation, as well as the weekly underlying trends. And right now what we're seeing is a complete blowout of the short-term database. I've been talking about this for nearly 3 weeks, that I wanted to see a complete blowout down to maybe 22%. Well, we're at 17%. I'll go through those details tonight, but we continue to see a massive liquidation of the short-term database. Meanwhile, we're seeing the opposite in the intermediate term database is continuing to get traction, telling us that longer term the markets will come through this and we will reach some support levels that will make sense and see a consolidation over this 4 to 6 week period that I've been talking about. Nothing has occurred over the last several days that are changing that outlook on the intermediate database. I'll continue to talk about this story as we go forward over the next several weeks. A lot of folks believe that the market got overbought, and it was overdone, as I discussed that pertaining to our short-term database. But really what happened, and I will continue to tell you this, is that the Apple and the Tesla splits loaded this market up with a lot of new stock, and that was not a positive event. I talked about that last week and even leading into the event that I did not believe that was going to be a positive event. So we're going to continue to see the gyrations in Tesla. We saw a massive collapse in prices yesterday, but my expectation is we'll see some stabilization here and start to see some type of consolidation at this lower end, and most likely we'll trade up for the next several sessions. But we'll have to hold some numbers that I will discuss in the technical section tonight. As far as fundamentals go, nothing is coming out today that matters. Market participants will continue to look forward to the claims on Thursday and the continuing claims. And there's the other metrics that will come out will be CPI on Friday. I don't see that to have any material effect on anything at this time. But as we come into Wednesday, we are going to see some stabilization here. As I said earlier, I will discuss the key elements that we're going to need to watch going forward. Let's go ahead and take a look at the charts and see what they're telling us for Wednesday. As we go through the WaveTech database, as I mentioned in the opening comments, we've seen a continuation of the liquidation. We had 4,008 sell signals and only 180 buys, setting the sentiment to a negative tone. But we also have completely blown out the database at 17.11%. This is most likely going to be close to the bottom of the percent bullish, and we should start over the next several weeks see some consolidation on a lot of stock that have been liquidated and start to see this percentage start to build from here. It probably will take at least another 5 to 8 sessions before we'll see this database start to build back. But this is exactly what I've been discussing with you over the past 3 weeks, is that I expected to see a big blowout. As I've been discussing, this will take somewhere between 4 to 6 weeks, start to see a rebuilding of the patterns. Now we could have another leg down. I'll talk about that in the technical section here in a minute, but it appears that we're at least close to the end of this. As far as the database goes, we basically have no risk. We only own 17 stocks out of 100. So basically everything is in cash, including many of our short-term ETF strategies. They started moving to cash last week on Tuesday, then again on Thursday. We saw more liquidation for today. So we're basically seeing a lot of these short-term strategies move to cash. The other thing I want to point out on this page here, only one sector remains long, which is transportation. It came on in July 24th. It's right at its typical holding period. It's 32 days of 31.78, so we're basically right there. The returns are up 12.48, so it's the only sector that's long. But as we look at the sector breakdown, up at the top here, we see only one sector long. Out of the industry groups, we're seeing only 25 long of 102. That's 24.51% bullish. And on the symbols, we're down to 1711. We now have 13,688 symbols that have liquidated and have no current trends. If anything, they're in downtrends right now. So we'll start to watch this database very closely when a positive rotation starts to come in. As I also mentioned in the opening comments, we're seeing the intermediate database continue to get traction. We actually had a positive rotation. We had about 700 buys, only about 300 sells, so we had a net positive. We've moved the percent bullish up to 70.68. So those of you just started watching the channel, or just to continue so you understand the difference, the short-term database is rotating. We started liquidating stocks on a short-term basis 12 days ago, and we've continued to see tranches last Tuesday, then again Wednesday, and then a big tranche on Thursday. This liquidation we're seeing on a short-term basis is setting up the rotation and the consolidation for the weekly charts. What's setting up on the intermediate basis is looking forward. There's at least another 160 to 180 days on average of a holding period for these weekly signals. Now, some of them might roll over if we remain weak into Friday, but most likely we will remain well above about 58% bullish on the database. I don't see us dropping below that number, and we might see some minor rotation over the next couple weeks, depending on whether the market can rebound or not. As we review the S&P futures, overnight we traded down into the grid just below 3,300, intraday low 32.95.50. It was there for about a minute, and it was a sharp bounce out of this area. Now the S2 was 32.83 even. We didn't get to that. We traded as high as 33.54, almost making it to R1 overnight. We're also seeing a substantial amount of contracts traded. Right now, London is open. We're seeing the market trading back at 33.38. It did trade as high as 33.54 about an hour and a half ago. So we pulled back a bit. We're starting to set up a potential for a retest of those highs at 56. Expectations for the day, as we've already basically seen the low of the session. We could print down to S2 on a reversal, but the R1 is going to be a minimum 33.60. There is a probability for us to reach the R2 level at 33.88 if we can get above that 60 level, and that will need to be done early in the session. As I also mentioned in the opening comments, the configuration has turned negative. PPM1 is now a negative 0.41. Anything under a negative 0.25 is a downtrend. That tells us that the 10 period moving average is going to be heavy resistance. Right now it's at 34.58. It's declining at roughly 0.5% per day right now. So we're going to see this number move down into around 33.90, maybe 33.84, which will play into the grid as it unfolds. You'll see over the next couple days. Now we are seeing, just with a little bit of strength right now, we're seeing a slight uptick on PPM2. PPM3 is still positive, but it's lost a lot of its momentum as it crossed its first and second derivative. And I've been talking about the crosses on the PPMs going back to last Thursday and Friday. I've been telling you that momentum's been lost. We exited the positions as I discussed earlier, and our models right now are short from Thursday of last week. And with this acceleration, there will have to be some base building. There is a possibility for another leg down, and I'll set that up as we go through the weekly charts. Switching over to the S&P cash, looking at the weekly graph, we did print down to 33.2927. S3 was 3330.22, so basically a perfect hit off of there. We actually closed at that level. With the way things are trading right now, we could test the 3300 level, which would be STX. If the futures can continue to gain some strength, we could open stronger and just trade right toward some upper numbers. In this grid right now, we're not likely to see even an R1 number this week, as far as I can tell. We'll be lucky to get up to the 3360, 3384 numbers. We'll see what kind of configuration we get over the next couple days. But also, as in the dailies, we're seeing the PPMs roll over. Now we've crossed over first and second derivative, and we're right at this 10 period moving average, 3328. So we have a cluster of numbers here. The S3, 3330, 10-week moving average, 3328.46. We have a PPM1 with a plus 0.61. Tells us there's only a 30% probability that will close below this 3328 level on Friday. So look for a reversal off this level and potentially moving back toward at least an S1. I don't think we can get to R1, but with the volatility levels we're seeing right now, that is actually a possibility, and I'll cover that as I see the markets unfold. This will be the final market I'm going to cover tonight, as we have a 2.5-hour live stream tomorrow at 1:30 New York time. So I'll cover everything at that time, and we'll be able to do live markets. That would be much more effective. But I want to make sure you see the market grid on the NASDAQ here. What we're looking at right now, the low's been 10,935. S1 is 10,943. S2 is 10,818. I don't think we'll get down to that level. R1, 11,177. The high is 11,199. This market has actually been stronger overnight. And R2 is 11,308. There's a possibility that we will trade back towards R2. And also what we're looking at is the potential to close back above the 40-day moving average, which is 11,238. We get a close above that level, we could easily start to move back up toward the higher end of the grid, towards that 11,004, 11,556 over the next couple sessions. But we're definitely seeing a potential for a reversal happening overnight, and this market was up over 1% earlier. The configuration on the PPMs are similar to what they are on the S&P. On a short-term basis, we're at a minus 0.72, big time downtrend. The 11,783 is the 10 period moving average. That's dropping almost 1% per day. So that number is going to come down very quickly down toward this 11,003, 11,200, and that will be substantial resistance when we get there. I will go through all the details. Make sure you come to the live stream tomorrow. I'll go through a lot of details. If you want to know what I'm thinking about gold, I still have the same opinion that I had last night. The same parameters are still valid. So go back and watch last night's video, and I'll see you at the live stream tomorrow. Thanks for watching.